When it comes to getting a vehicle short sale put through with the lender, most banks or vehicle lien holders are looking for a few general guidelines to be met. First of all, the loan has to at least be 18 to 24 months since inception. They don't want to, first or second payment default to turn into a short sale. So if you've had the vehicle for a year and a half, couple years, that's normally what they want to look at, just to make sure that there was no fraud involved with the original purchase. Second thing is very important. They want to make sure that the party that is taking the vehicle or buying the vehicle is an unrelated party. They don't want to have a loan be discounted and short sold to a brother, cousin, parent, that kind of thing. They want to make sure there's an arm's length transaction to a legitimate third party. The other factor which encourages lenders to process a short sale on your vehicle and to absolve the loan is the good faith participation of the borrower with some cash towards the loss. For example, if there's $4,000 or $5,000 negative equity that's being waived by the lender, they want to see a few $100, $500 or $600 at least put into it. The more cash that goes into it, the more the lender is likely to approve the short sale. So keep that in mind. Having some cash towards the deal is something the lenders like to see. In some cases, the lender will also like to see some inspection of the vehicle just to make sure that the condition or the ownership of the vehicle is still intact. Sometimes they'll also look to see if the delivery transaction to the new buyer is performed correctly with the right title paperwork, the right applications. Make sure that the lenders sign off on the lien release is done properly and not through some type of mechanics lien. Also, be sure that you keep your insurance on the vehicle up until the time of the transfer. A lot of times lenders will verify that the vehicle is insured. They don't want to be in an uninsured position up until the point that the vehicle is transferred. So keep your insurance intact, and also make sure that your buyer has a good insurance policy for their coverage when they take ownership of the vehicle. So a vehicle short sale with a lender, something that has some best practices, some general guidelines that if they're met, have a higher probability of the short sale going through. Remember, the lender doesn't want the car back. They're not in the car business. They're in the money lending business. So a vehicle repossession is something they want to avoid because they have to ship the vehicle, send it to an auction. There's all kind of fees and expenses involved. In many cases, they don't even want to take the vehicle because there's no financial incentive for them to do it. It doesn't mean they're going to get rid of the loan, but a short sale is one way of doing it rather than letting the vehicle sit and have no way to get a title for a subsequent owner. So check out our website, carshortsale.com. There's more information, and if you have any questions, you can reach us there.